All right, so boom. I'm gonna start with US 30. I'm gonna talk about GU, and then I'll go into the other pairs. Just a quick update on what I'm looking at, some analysis. Whoever's able to join the call will see it, but I'm also recording it as well, so those that aren't here will be able to see it too. But pretty simple here on US 30. As you guys can see, we're having an accumulation, right? Huge accumulation here at the 43,500 institutional level. So pretty nice accumulation yesterday. The main thing that stuck out to me yesterday was this wick right here, right? As you can see, at all the lows we have wicks, right? So when you have wicks at the lows in a range, you're most likely getting an accumulation, right? I would say 80% of the time when you see wicks at the bottom of a range. So seeing all of these wicks, seeing all of these rejections here, and then all I needed was the break of the high. So now I'm kind of being aggressive in buys, which is why I took the buy today underneath Asian lows. I was honestly expecting this. Well, honestly, I was looking for a buy down here anyways. I was going to execute a buy here no matter what, but I was at least wanted to see Asian lows taken out, and then seeing that we was getting rejections early, it was whether I wanted to wait a couple more pips or a couple more minutes to take the entry at the 50% down here, or just execute the entry here with the bigger stop loss. So I decided to just execute the entry, and now the next entry is gonna be coming out of here. I would like for us to come into equities open down here, but if we don't make it, let's say market goes down and then we start, you know, getting back bullish pressure, anywhere underneath this high is where I'm looking to buy it. So I'm gonna let this bearish pressure go on until I see that we start bouncing back, and I'll take my entry. Next stop loss is gonna be underneath here. So I have two entries. I have like a larger entry down here. Stop loss is underneath this low, and then the next entry will come out of this setup here, the manipulation, and that stop loss is going to be underneath this low. And targets, mainly, first I'm targeting here. I want to see how we react around this area. If we break this high, then I'm going to be targeting liquidity above the highs. So pretty simple there on US 30. Now GU, as you guys can see, G was flying. So GU was pretty easy as well. Manipulation of liquidity, break of market structure, high to low. So we had our mitigation here, and you guys can see in our mitigation of this manipulation here, there was an accumulation, right? So obviously that is going to be your next entry. So this mitigation right here, you can see we mitigated that. So if you didn't catch this entry, you had a next entry right here, and now we're about to make the new high. So now this market's about to go higher. Only targeting a 1 to 3 on both trades. I think this one, yeah, 1 to 3 on both trades. So pretty simple there on GU. Let's get into some other pairs. I know another pair that I was talking about, GCAD, kind of stuck out to me. So in the market analysis, we're talking about this this bullish market cycle here. As you guys can see, if you guys want a perfect example of bullish market cycle and how to, you know, trade the market in when it's like bullish, this is a perfect example here. Basically all you're gonna see is we're manipulating lows every single time. All of these boxes, you see the manipulation of lows right here, manipulation. Liquidity got left here. The next day, here's another manipulation of the lows, another manipulation of the lows, and then Sunday we talked about this last area here, which was the next manipulation. You guys can see we came down, we mitigated, and we've been taking off ever since. And we're still manipulating lows, right? We can see right here, Asian lows got manipulated. We got to push to the upside. Here we did not get a manipulation of Asian lows, so potentially next setup would be taking out these lows going higher. So just something that stuck out to me, but this is a good thing to look at and a good little back test to train your eyes for a bullish market cycle, right? And you know, go back and see how you would have played these moves towards the upside, because there's a lot of opportunities taking this market higher. Let's see, EU is not as clean as GU, so I don't have any specific setup here on EU just yet. What I can see so far as we are forming, we did take out Asian lows here, and I do see that we are reacting right there today. So potentially that'll be a change of character here. If you want an aggressive trade, I mean, we're bullish today anyway, so as you can see, we're probably going to continue going higher for the rest of the day. Seeing how GU just exploded like this, most likely DXY is falling off, which it is. So DXY is kind of falling off. We can see we took out the highs, so we have a distribution up here. We do have a lot of liquidity underneath these lows, so we can at least expect some more drop off from DXY to at least take out these lows, which means you can expect EU and GU to continue higher for the rest of the day, right? So potentially here, looking for this high to get taken out, look for a mitigation at this accumulation here and take this higher to take out Asian highs. That would be EU, and a more safer option would just be waiting for us to just take out both of these highs here, and then tomorrow looking for that mitigation and for us to take higher, targeting this supply zone. All right, let's see, gold. So on gold, we are getting a pullback. We have a nice distribution up here, so that's why I draw up my fibs here from this low to this high, right? Low to high, and we're at discounted pricing. We tapped to the 71, near the 80% multiple times. So this is the best buying opportunity here on gold for today. So if you're gonna look for buys on gold, this would be it at this area. We don't have any confirmation entries just yet on this though. Well, actually, hold on, let me see. Okay, we have a nice accumulation here. So to be honest, I'd wait for a reaccumulation. So wait for that distribution, validation of that, and that would be the next trade. If not, if we don't get that and this market just continues going higher, I would at least wait for us to take out this high, and then tomorrow look for a pullback to take this higher that way. Let's see. I think that's the main things that I wanted to talk over. So anyone that's here, do you guys have any specific pairs that you want me to look at? I think I covered everything that I wanted to. What's the CAD giving a reaction here? Price action is not 100% clean on this market though. Seeing a lot of liquidity staying intact. Lows here, lows here, lows here, lows here. So we're getting a reaction, but this is not really bullish market cycle. We're not seeing manipulations or anything like that. But what I do see is that we are invalidating some of these areas, these weak supply zones. So we still can get a potential bullish move, but to be honest, I'd wait until we start taking out some of these lows, probably get a pullback to take out these lows before we go higher. UCHEF still on a pullback. Like I said, still waiting for us to get down here. This is where you want to buy this market, inside this area. So you can look for selling opportunities to the downside. I think as we started this week, that's exactly what happened. This was the first area I was looking at, but you can see the market started creating its own little moves towards the downside early on. We have Asian highs being rated, breaker structure, market goes higher, mitigates, take out Asian highs again. Breaker structure, we didn't quite reach the top of this area, so I would expect us to go back above Asian highs, but to be honest, we probably just are going to just continue down for today. We already took out Asian highs already. We're seeing that we are getting weakness. So there's a sign of weakness here. Once we do break these lows tomorrow, that'll be your next mitigation. Take us lower into our demand zone. And I think A-Chef, yeah, A-Chef was another one that we were talking about this week as well on Sunday. This was an area here. Boom, we had distribution. Here's our redistribution. I told you guys to look for sales here, taking out all of this liquidity and just getting us into this area, which we are, and we are in discounted pricing. So now we need to change a character first. So zooming into here, we're saying that we're forming some type of accumulation. We have our selling climax here. Here's our ST. This is potentially our ST and B. We need this high to be broken before we say the market is going higher, before we assume that we're going to take any more buys towards the upside. So we need to change a character, but we are forming an accumulation. So if the market creates one more drive down to the 80%, let's say you see an accumulation down here at the 80%, I would buy this accumulation. Probably going to be a bigger stop loss at this low down here on that accumulation, trying to get that bigger ACU, right? That's if we get one more drive, but potentially we can just go higher. If we break this high, then you can start looking for buys out of this potential ST and B, because we can be just a type 2. So just keep that in mind. And looking at US 30 here, might just have to take another entry, but because it's not pulling back. I'm gonna give it some more time to breathe. We'll see. But yeah, any questions, anything you guys got? Just want to do a quick call to update. Hold on. I think you connected. Hello? Yeah, I can hear you. You said the current reaccumulation, this one right here. I would look for a confirmed reaccumulation. So that's what I was saying earlier. I would honestly, looking at these highs, I would honestly like to see a distro and then we break. That would be a confirmed reaccumulation for me. Yeah. I want to see this become a distribution. Only because I do want us to come underneath this high, because I want to take an entry down here. I don't really want to take an entry up here. Main reason why is because this market goes up here to the 44,000. It's easier for the market to react up here and then come back, and it's gonna search for demand, which is down here. So if I'm taking an entry here, I'm gonna have to handle this much drawdown. So I'm trying to avoid doing that, basically. That's why I want to take an entry near the demand zone. So if the market does come back towards the demand zone, it's near my entry, to where I don't take an entry up here and I have to hold drawdown, because my stop losses always goes underneath the demand, or the area that I don't want the market to invalidate. So if the market invalidates this low, then my bias changes. So that's where my stop loss needs to be. No matter where I take the trade, my stop loss needs to be underneath the where my bias invalidates. So that's why I want to kind of get a pullback so I can get an entry near this area and not up here. I don't want to deal with drawdown. That's the main reason. So that's why I'm trying to be cautious, and I don't really need to be aggressive since I'm already in an entry. So I can only lose 2% in a day, and I already risked 1% on this trade. So I only have 1% more risk that I can risk, and I don't really want to be too aggressive with that. So I'm just kind of waiting. I'm waiting for the perfect moment. Yeah, hold on. That's 100. Let's go. Boom. So now it's gonna be the same thing. We rated Asian lows. Now, looking at this market, let's zoom out. Boom. Looking at this market, order flow is still bullish from this low to this high. We are in discounted pricing. I don't really have to draw this, but I will. Boom. You can see that we tapped at the 71 near the 80. So this is really, really discounted pricing. This is where you want to take your long opportunity. So today we do have a setup, which is us rating Asian lows. Right. Yesterday we could see we had a manipulation lower. We tapped into the 71. Today we're going higher. So us rating Asian lows here, and that's actually gave you your entry already. So boom, two ways you could have taken this. Just draw your fibs from the low to the high. Here's your pullback at the 50%. That's your entry. Stop loss goes underneath the low because we rated Asian lows. Or to be honest, you could just take a trade right here. Stop loss at this low. But yeah, this is where you want to buy. Once we do take out this high, I do see us going a lot higher. Once we do take out this high and we get that aggressive push past this, I can see we pull back into this area. If you also want to wait for a safer entry, wait until we break this high. That'll be invalidation of supply. Boom. This will be the demand zone that invalidated that high. That'll be your next area to take an entry. Targeting here and then targeting up here near that institutional level, because you can see NAS is reacting off of an institutional level as well. Where is it at? 21,000. Oh, right there. Yeah, and then just you look at the institutional levels, and the reason why I even use these levels is because indices usually respects these levels a lot. Wicks, right? You can see how much reactions off this one area. And even before then, distribution, wick. I think that's it. Yeah, that's it. All right, yeah. But whole numbers. Or just whole numbers. So 21,000, 22,000, 23,000, 21,500 is another one. So whole numbers, and that's mainly it. Whole numbers are going to be like the staple. Usually whole numbers is literally the only way. So US 30, whole numbers for US 30 would be 43,000. So 43,000 is down here. That was my next institutional number. And then this was an institutional number, 43,500, and then 44,000. And then 44,500, and then 45,000. So you kind of see what I mean. $46,000, that'll be an institutional number. But just basically whole numbers. And the reason is just, if you think about it, like I said, like I always say with the institutional numbers, when you're talking about prices, and let's just say you're talking to somebody about a price, you're not going to say that US 30 is at 43,841. You're gonna say it's near 44,000, or it's near 43,000, or it's near 43,500. You're gonna use something to summarize it, and think about that. Usually that's where people are taking profits, at whole numbers. So that's why you see reactions at whole numbers, and that's why we call them institutional numbers, because usually institutions are targeting those bigger whole numbers when they're taking profits, or they're accumulating at whole numbers like this. So I mean, it's not like a set strategy where anytime the market gets to a institutional number, you sell it or you buy it. But I use that as catalyst for my confirmation. So the fact that we're getting an accumulation here, and you can kind of see we're in the middle of technically nowhere because I don't have a demand zone. So that's why I was kind of hesitant about buying the market here. But we're getting an accumulation here, and we're at an institutional number. So it kind of adds extra bias, extra confirmation for me, because I know, okay, we're accumulating at institutional numbers. Institutions likes to accumulate or distribute at institutional numbers. So it just adds more confirmation for me. It gives me more confidence to buy the market in here, because honestly, I was looking for us to go lower down here to buy the market. So yeah, it's just something to look out for. That's why I have it marked out. Once we get to the 44,000, I'm going to see how we react, especially above here as well. I'm going to see how we react. If you see us sitting above the 44,000, that's a good sign, because most likely the market is just going to push past it, right? If we come to the 44,000 and you see a wick, then that'll give you an idea that, okay, the market is rejecting here. We're probably going to come back to our demand zone, right? It just gives us extra confirmation, just gives us extra things to look at, and just to see the market a lot better. No problem. Yesterday's at 50% reaccumulation, so yeah, why? It's at 50% of the reaccumulation. You're talking about on a bigger time frame. Okay. Let me see your analysis. Let me see your analysis. No, I'm talking to Jake. Okay, you're talking about this, like this whole leg in general. I see what you mean. You're talking about from this low to this high right here. Yeah, I was looking at that earlier. And that was another reason why I was like trying to be aggressive here as well, because I did see that too, that we did pull back within 50%. Yeah, most definitely. I agree. All right. I mean, if you guys don't have any more questions, I'm going to stop the recording on the live and get this posted for those that weren't able to be here.